We're back still watching the special coverage on the Union Budget 2024, and we are joined by some industry voices also coming in. Anant Goenka, Vice President and at FICCI, and Vice Chairman at RPG Group, along with Shubhrakant Panda, past President of FICCI and Managing Director at IMFA, Indian Metals and Ferro Alloys. Gentlemen, thank you very much for joining us on ET Now today. The market is, especially the financial part of the market is really liking the budget a whole lot. But with you as an industry representative, Anant, let me start with you. How did you read the Capex outlay? You also represent, that part of the industry which is directly correlated with the Capex happening in our country. Almost 3.4% of GDP, 11% growth coming in, 11.1% growth coming in there. What are your thoughts to start with over there?
I think it's an extremely positive note on Capex. As you said, 11% growth on Capex, already on a 33% growth last year. This has a huge multiplier effect on GDP. Private investment has been relatively lower, so this compensates for that. So very timely, and I'd say the Capex is very well divided across the board, whether it is on railways, roads, ports, across the board, and that's great for across the infrastructure segment as well. So I'd say it's a sign of continuity of the budget as well.
Yes, the continuity of budget is something which has been liked by the street as well. But Mr. Panda, your first thoughts on the budget and what really stood out? Because people were a bit worried about the decline in the Capex, but it's coming at a very heavy base.
So, I think it's a clear articulation of this government's intent of, where they see the economy and what is the outlook going ahead. So, from that point of view, whether it was in terms of being clear that the focus areas are the poor, the women, the youth and the farmer, or the fact that there will be a continuing, focus on Capex so as to support the economy. In fact, in this context, I think the government has done very well in doing the heavy lifting thus far. And as Anant mentioned, there was a sharp 33% increase in the previous year's allocation, and on top of a record budget, a further 11% is nothing to be scoffed at. And in fact, what is now happening, as the finance minister acknowledged in her speech, that the private sector is also stepping up to the plate. And therefore, that mix between public and private Capex, which will keep the economy chugging along, I think is going to be visible. And backed by receipts, the fact that government expects its borrowings to be lower this year will open up space, as she said, for the private sector to have the necessary resources to go ahead with its own investment plans. So overall, I think quite positive. But one final point, I think what stood out is the commitment to fiscal discipline while pushing for sustainable and inclusive growth. So a 5.8% fiscal deficit for the current year and a forecast of 5.1 for FY25, I think is very, very positive, which is why perhaps the markets are cheering that.
Correct. Mr. Panda, you brought up a very important point. The street was the bond market, I would say, and then reflection on the, the bank index and the yields, of course, is really cheering the 5.1% fiscal deficit aim, which clearly says that it appears that the government, and after the finance minister's speech, which was a very brief one this time, our own Prime Minister also alluded to the point that the aim is to continuity reforms in a prudent manner. In fact, one thing which everybody is observing, and I'm sure you also must have taken note of, the way finance minister this time round applauded the contribution of the taxpayer and how the resources of the taxpayers across the country, whether it's corporate taxpayers or individual taxpayers, they are being utilized in a very efficient manner for infra creation. You represent, infrastructure sector indirectly as a company, and of course at FICCI, the industry level. How are you witnessing the Capex momentum in our country? Further multiplier by the housing scheme again. Do you see that this will continue to give real estate cycle a push, building materials and housing finance and the entire the ecosystem of Capex?
Is that a question for me?
Mr. Panda, that was for you.
Yeah. So, okay. So you're absolutely right that, and Anant also mentioned this, that infrastructure has a clear multiplier effect, and therefore I think this is money well spent. Up till now, it has provided a boost to the economy when it needed it most. That momentum is continuing, but space is now being created for the private sector to step in and do its part. So, infrastructure clearly has a multiplier effect. And then when we go forward and see the impact that it has on the real estate sector and the boost to the housing schemes, etc., that again has a knock-on effect across the spectrum, which will bode very well for the economy, because it's very targeted spending. It's being done in a manner with a clear vision, with a clear articulation of goals. And let me also bring in something else here, which is that the Prime Minister's repeated mention of Viksit Bharat is now being given a further push by allocating funds for reforms, milestone-linked reforms at the state level, because it can't simply be the centered, moving in this direction. In a federal system like ours, the states also need to do their bit. So I think having a large outlay of 75,000 odd crores to incentivize states to carry out necessary reforms, I think is also a very, very important measure.
Let me bring Anant also into the conversation. Anant, if I had to ask you to rate this budget, what would you rate it? A 7 out of 10, 8 out of 10? And what else is something that the industry was asking for which did not meet the expectations, because it can't be 100%, right? There's always something more that you want.
No, I'd certainly rate the budget very high. Not sure about a number, but certainly a good budget. I'd say that it was a vote on account. So in that sense, there was not very high expectations that it would be a very comprehensive budget. But possibly in the next budget, it would be great to see some visibility on disinvestment plans by the government as well, or maybe just go ahead with the actions that were planned anyways on the disinvestment side. So I'd say that's something which we look forward to seeing.
Touching that point a little further, when the finance minister says that from here on the focus will be of the government on the next generation reforms, how do you read the next generation reforms? Anant?
Yes, I think I'd say the budget covered three parts. One was inclusivity, where we focused on farmers, youth, etc. Second was on continuity, where I'd say infrastructure played an important part. And the third, as you asked, would be future orientation, where we did cover elements of green energy. We covered areas of startup, entrepreneurship, particularly amongst women, regenerative farming. I think these are all deeply future-oriented thoughts, which a high-level strategy has been set forth. We're now waiting for the details, but clearly a good mix of all three: inclusivity, continuity, and future orientation.
I just wanted to get a sense from you as well. As far as the manufacturing sector is concerned, the PLI schemes and all have been done in terms of policy action so far. Were there further some expectations? Because we didn't read too much in terms of the manufacturing push coming in, if you can hear me right. Okay, I think there is a bit of an audio issue with...
No, it's cutting off, unfortunately.
Okay, Mr. Pandey, let me repeat my question. I was asking specifically on the manufacturing sector, whether it was defense, whether it was electronics manufacturing. Okay, Anand, if you can take this question while we set the line with Mr. Panda as well. What's your take as far as the manufacturing? Because they're talking about the sunrise sectors, and of course, this is one area which has been identified. The semiconductor allocation has been increased quite a bit. Your reading of the entire manufacturing push?
Whatever is happening yesterday itself, we saw there was a duty reduction on certain electronics components. So PLI schemes, a lot of that gets announced outside of the budget. So being on account, I don't think there was very high expectations on manufacturing side at this point. I think certain schemes, whether it is FAME, PLI, etc., may be coming to an end. I think at some point it'll be good to see the continuity of those schemes to provide that clarity over the long term. And I'm sure we'll get some clarity post-elections as well.
Anant, Mr. Panda, both of you gentlemen, thank you so much for joining us on this show today. Let's